Kitco News special coverage of the Future Blockchain Summit is brought to you by Coin Payments, crypto payments made easy.
We're speaking now with the Altcoin Daily brothers, Aaron and Austin Arnold. Welcome back to the show. Fantastic seeing you guys in person. Not the first time I've seen you in person, of course, but the first time I've interviewed you in person. Altcoin Daily, if you haven't been paying attention to the internet, is one of the world's largest YouTube channels for crypto news. Speaking of crypto news, let's start with crypto news. You guys are on the pulse. You cover news and publish a video every single day. What's been driving the markets over the last 2 weeks in the crypto markets? Let's start with that.
Hey David, great to be here. Great to see you in person, and just to see you in action, man. You're a workhorse. I mean, back-to-back interviews. I don't know where you're going to be in 10 years, but I know you're going to be huge.
Thank you. Red Bull and lots of sleep. That's my secret.
Yeah. So the cryptocurrency markets. Bitcoin specifically, still highly correlated to the stock market, traditional markets. Some people, here's the thing, Bitcoin consolidating near the local lows. Bitcoin consolidating near 20,000. Its low from a few months ago is 17.5. And it's reminiscent of back in the bear market of 2018, 2019, when Bitcoin was consolidating near $6,000 and eventually dropped by 50%. Now back then, from my memory, a lot of people thought 6K was the bottom. Today, a lot of people think that we have much further to go. And usually when everybody's thinking the same thing, the opposite happens. And obviously the market goes in ebbs and flows, chops people up all the time. Now here's the thing. Bitcoin could fall to support around 11, 14K. Bitcoin could get to 8K. Bitcoin could get to 6K. I've heard a lot of calls like that. And certainly there's many reasons to be bearish. I wrote down a few notes. Inflation's been happening, dollar devaluation. So what happens? Fed continues to tighten. Sovereign debt crisis, equity indices broke their June lows. Obviously comparisons to the 2008 financial crisis. XPS closes 3 red quarters in a row. OPEC cutting production of oil, so higher oil prices. Euro pound dropping in value. Putin waging war with the West. So plenty of reasons to be bearish. As far as where Bitcoin's going to go, if anybody had the answers, we'd all be rich. And I'll just finish off and say that Bitcoin could pop from here, but the low does not have to come in the next 3 months. That might be max pain, but also max pain might mean Bitcoin's low comes in 6-9 months.
Can you offer a rebuttal to your brother's bearish outlook? If you had to make a bullish case for Bitcoin, what would it be?
First off, David, thanks for having us on. If I had to make a bullish case for Bitcoin, first off, how I'm playing the market, I've started dollar cost averaging when Bitcoin hit 17K. As if we're not going lower, I do have cash on the sides. As if we are going lower, so I'm prepared for anything. A bullish case for crypto in general, we're seeing major bank intercommunicator Swift partner with Chainlink. We're seeing Ethereum go through a successful merge, Cardano following a Vasil hard fork. So we're seeing the developers flock to these L1 protocols. We're still seeing building in the space. Obviously, the news in 2022 into 2023 is macro. But as the world trends more centralized, more permissioned, I think there's a clear vision more than ever why we need a decentralized, censorship-resistant protocol as a future in all this.
And I just want to echo that real quick. The case for Bitcoin, the case for decentralized finance, open protocols, there's never been a better case. The world is trending more digital. The world is trending more centralized. Tons of people holding your money up. We can talk about Russia, Ukraine, the sanctions on Russia. Several months ago, the Emergencies Act in Canada, with the truckers, regardless how you feel about that. And even on a smaller scale, everyday people, in America, in Canada, with PayPal censors your money all the time. There's never a better case for an open, more decentralized, more permissionless money like Bitcoin or financial products like decentralized finance.
But why does finance need to be decentralized? I understand the digital argument, but why decentralization?
I think if you ask average people, do you trust your government? Do you think people trust their government more today or more 30 years ago? I think a lot of people, our grandparents, trusted the government more 30 years ago. Now everything, whether you like it or not, is way more public, way more open. And, average people now have a voice and a choice, and they don't want to have to necessarily subscribe to a system that is doing secret stuff behind their back, waging war, or just making decisions when they want self-sovereignty.
Not to veer away from cryptos, but to your point about the governments not being able to capture the people's trust, why do you think that 30 years ago our grandparents or parents trusted the governments more? Why the deterioration over the last couple of decades?
Personally, I think it's the digitization of the world. Crypto is a natural progression of the world getting more digital. And back then, there wasn't a lot of good places to get information. There's, the 3 channels on television. There was the library. It's what your neighbors say, what you heard on TV, what you heard on the radio. Now, getting that information with the internet, that information is able to get to everyday people, and people are kind of waking up to the fact that there needs to be some sort of change.
Okay, now some sort of change. Let's talk about this societal change and how it impacts cryptocurrencies in particular. Suppose we have a complete revamp of the monetary system such that everything wrong with society gets fixed, just hypothetically.
I love it.
What would this system look like?
And I just want to say, and first of all, I don't think, some crypto people say it's going to total utopia. I don't think that. I'm just aiming for a little bit better.
I'm not saying we have to live in reality for the next 2 minutes. Let's just hypothesize. Imagine a future that is utopia. What would happen? What would need to happen to our monetary system? What needs to change?
I think plain and simple, self-sovereignty. That's what Bitcoin offers you. Instead of having to custody your money in a bank where they can lend it out, they can do all this stuff you're not asking them to do. You now have the power with Bitcoin, and especially when we pay our taxes to the government, and you question whether they're actually helping your local community or what they're doing with that money overseas. I think as we trend towards that more utopian future, if/when, I think that'll lead to better self-sovereignty for the individual.
In cryptocurrency, you can custody the crypto yourself, hold it yourself. You don't have to rely on that third party, and you don't have to rely on middlemen. Since Bitcoin and crypto is trustless, you can trust that if you got the Bitcoin, that's your Bitcoin for sure.
Cryptocurrencies aren't impervious to hacks and cybersecurity risks. We've just seen this recently. Binance Coin, 570 million of Binance BNB was hacked. Now, Binance claims that not all of it was lost forever because not all of it was able to be moved off chain, but it's still a large amount that was attacked. Now, the particulars of this hack are very technical. Basically, the hackers were able to print BNB out of thin air and issue themselves $100 million. More or less, the blockchain has been stabilized, or at least Binance claims. Anyway, the point being that hacks are a problem, they are a concern. How would you respond to the argument that cryptocurrencies aren't really a safe store of value given cybersecurity and hacking concerns?
Yeah, there's a lot of different things we can talk about with the Binance exploit and exploits in general. And first of all, I want to say there is risk, particularly as you get to some of the other chains. There's plenty of risk. We know that. With Binance specifically, it was Binance Smart Chain, so that's their Ethereum competitor. I want to say, first of all, out of all, so many exploits over the last several years, Binance and CZ, in my opinion, actually handled it really well. Immediately communicative out on Twitter with their community. Yeah. They halted the network, which they're able to do because Binance Smart Chain only has, I think, like 24 validators. So it's obviously more centralized than Ethereum. So they were able to step in and handle that, pretty clearly. One of my big takeaways is that a lot of people like to paint it as a black and white, decentralized, not decentralized, good, bad, and there's certainly things that aren't decentralized and things that are more centralized. But I think as more time goes on in cryptocurrency and the more we learn, it's not just good, bad, black, white. We can see the differences in these chains. For instance, Binance Smart Chain, 24 validators, got exploited, got shut down or paused. The problem was fixed, more or less, as opposed to a Solana. It gets paused all the time, there's exploits, that one goes down all the time, as opposed to an Ethereum, which is now more decentralized, never been hacked. The only thing, there was the DAO. The
Solana wallets were hacked, right?
Yeah. There's been plenty of issues with Solana for sure. But then when we get to the Ethereum, never really been hacked or crashed. They did have a reorg with the DAO hack back in the day. But here's the good thing about all this. All of this is open source. And because of that, you can learn a lot. We are in the early days of the Wild Wild West, but each new upgrade that comes after, each new protocol that comes after stands on the shoulders that everything that came before it, and hopefully gets a little bit better, a little bit safer. That being said, there's still a lot of work to be done on security, on user interface, and all that stuff.
Okay. I have a question for you. Now, we talked about your Bitcoin outlook, bearish for the most part. You offered a bit of a short-term, long-term bullish. What about the altcoin space? You are called the Altcoin Daily channel. You cover the altcoin space probably better than most people that I've seen, so congratulations. What's been happening in the altcoin space? Cardano, Ethereum, you mentioned. Give us some news updates.
obviously Bitcoin is the market mover, and when Bitcoin, everything's controlled by macro right now.
Right.
But what we're seeing in terms of like the developments is the exact same thing we're seeing in terms of how people are allocating their money. Back to the high caps, back to the ones that have more trust, that have been around here longer. So we're seeing, especially after the merge with Ethereum, we're seeing the developers, the people building on the network flock to Ethereum and those other prominent layer ones. People ask me all the time, when you start getting back into altcoins, when you start reallocating, whenever that is, when the recession hits, if/when it does, to me, I'm a sucker for the L1s in a good way. Because as opposed to the internet, where all the value accrued on the applications built on top, you couldn't invest in the underlying protocols. In cryptocurrency, obviously DeFi is not going away, crypto gaming is not going away, NFT is not going away. And no matter which dApps make it in the end, the value is accruing on these L1 chains. And the top ones right now are Polkadot, Ethereum, Cardano, Algorand, Avalanche, etc.
Go ahead.
I just want to say, he said, if the recession hits. Now, every single comment is going to be, this guy doesn't know we're in a recession. No, but as far as like the altcoin space goes, to be quite honest, dude, it's never been better. Like, we started the channel in 2018, and there was a lot of like not good stuff going on in the altcoin space. Now it's just developing further and further. We can talk about specific protocols, Cardano with the Vessel hard fork, Ethereum with the merge, changing the tokenomics, cutting down the energy used, or even something like Chainlink, which partnered with Swift and is transitioning proof of stake. A lot of happening in different sectors, whether it's DeFi, gaming. I think generally where it's trending is, and it's not here yet, but I look forward to a world where different projects, whether they're gaming projects, their price, their value doesn't depend on the price of Bitcoin or the price of risk assets or how much the Fed prints. Their value depends on, if it's gaming, how good the game is, how many users they have, and that's where we're trending.
Another sidetrack here, talking about the recession. Not everybody thinks we're in a recession currently, actually. JP Morgan's chief, Jamie Dimon, just issued a statement. He previously said that the US economy is doing still okay, his words. And now he's saying there is a very, very serious risk that the economy will head into a recession over the next 6 to 9 months. So not here yet, according to JP Morgan. You guys live in LA. Are you feeling the recession?
It's crazy because there's obviously, by the traditional definition, we are in a recession.
Yeah.
Now, Jamie Dimon has been saying one thing and doing another with Bitcoin since 2016. He would actively FUD Bitcoin openly, saying, I'd fire any single person, one of my traders, who touches Bitcoin while JP Morgan was buying. That's a fact. We did a video on it. David, you can look it up. Am I seeing the recession in Los Angeles? I think, average people are being hit hard the most.
Yeah.
Now, unemployment is still going down, which does kind of give the Fed more power to keep raising interest rates. So that's why I think we probably have more pain to go. But it's a big unknown. What the Fed is going to do, they control the monetary policy. As opposed to Bitcoin, it is set in stone. We know the issuance, we know all that.
I had this conversation with Gareth Soloway, whom you've also worked with. I asked him when, or not a question of if, because he thinks it's going to happen, but when Bitcoin would eventually diverge from the stock markets, because we have seen these two assets highly correlated in the past. What do you think?
I think eventually that will happen. I mean, just what's going on right now, let's be real, Bitcoin and the stock market highly correlated. You can just look at the chart and see that. And one such reason, people in cryptocurrency like to say Bitcoin's a hedge, like to say Bitcoin's very different, and it is fundamentally different, but the fact is the people with the big money, the people that control the market, they think of Bitcoin as a risk asset just like everything else. So when it's risk off, they take money out, and vice versa. Eventually, because Bitcoin is very different from a company, it is an open source protocol. Nobody controls it. There's no company. There's no offices. I think the more. And here's the thing: nobody can stop Bitcoin because of that reason. So I think as more time goes on, as the Gini coefficient gets better, as it gets more distributed, more decentralized, more awareness grows, and it's get used more. Whether it's just for a little bit of a store of value, kind of to replace gold, or maybe it's something more. I think eventually there should be a non-correlation.
Okay. I want to move on and finish off with regulations, because that's obviously very important for the space. I'm just going to read a paragraph from a Kitco news article here. Stablecoins should be subject to the same rules as banks, say regulators. The Financial Stability Board, FSB, which is comprised of a group of central banks and financial regulators from across the G20 countries, has released a new report highlighting the dangers of stablecoins and casting doubt on just how stable some of these offerings are. Here's a quote from the report. Most existing stablecoin issuers promise to maintain a stable value, typically relative to a single fiat currency. However, Many of these existing stablecoins are issued by unregistered and unlicensed entities and do not have credible mechanisms to support their promise of price stability, the report said. Very harsh words from regulators here. We have seen what happened with Luna this year, so there is some truth to that. How would you respond to this?
Look, a stablecoin should be backed one-to-one by whatever it's pegged to stablecoin wise. I think we can all agree. Let me reframe your question a little bit, David.
Yeah.
Because people come at DeFi when they see, in cryptocurrency in general, when they see headlines like this. I think the biggest thing in the last 6-12 months is we need some more regulation on CeFi, centralized finance. Because if we think of the big crashes or the big things that went insolvent in this last year, Celsius, Luna, stablecoin, nothing more centralized. Voyager, insolvent. Credit Suisse, on the brink.
Wait, Celsius centralized. You're calling it a centralized platform.
Nothing is more centralized than Celsius. Celsius has a token.
Oh, I'm not arguing with you. that's the first time I've heard them. Okay, please explain.
DeFi would be the Aves and the compounds.
I see.
Those blue chips. And by the way, they're working fine. Celsius was a centralized company that acted as the market maker on behalf and also lent those assets out when they shouldn't have. So if I'm thinking what needs the most regulation, I would say that
CeFi.
Look at the things that actually crashed or went insolvent in these last 12 months.
Yeah, and I'd just like to quickly add, zooming out a little bit, there's a reason why stablecoins keep getting brought up, and there's a lot of people seems like there's a problem with stablecoins, there's an attack on stablecoins. Certainly there should be safety and security in the market, and there's a lot of work to be done with security and with UX UI. But beyond that, stablecoins are kind of like seemingly more of a direct threat to government fiat money. They're all going to issue central bank digital currencies, but they're pretty slow to do it.
Right.
And people issuing these stable coins, that's kind of a direct threat to them.
Okay, just going back to your point, how should a company like Celsius be regulated? Or how should they been regulated?
In general, some people in cryptocurrency don't want regulation at all. In my opinion, if you want mass adoption, then regulation's inevitable. The question is how it's going to happen. I think it should be much harder regulation on the companies and get all those rules and regulations off the individual user. For example, the accredited investor rule, which keeps average people from investing in startups. Right. I think that just keeps the rich richer. It gatekeeps all that stuff. I think you should have regulation to keep these centralized entities from lying to individuals, but you should give individuals as much self-sovereignty as possible.
Yeah. Do you have anything to add?
I just want to say that the one reason that users lost money on Celsius is because they did not hold your own keys. So it's very important to hold your own keys, meaning you control your coins, and something you can do with Aave, Compound, these decentralized protocols. They have their own risks for sure, but that was one big problem.
How do you yield farm with your own keys though? You have to deposit it in more or less a centralized platform unless you stake Ethereum yourself, I guess.
I don't yield farm. So that's a great question. I think there's protocols out there developing, but obviously we are in such a speculative time that we're still watching the market work itself out in real time.
I guess it's a risk and reward thing. You deposit your cryptos to earn yield, but technically somebody else has custody of your coins like we've seen with Celsius. To your point about regulations being annoying, I'll bring up an annoying new regulation in Canada, the KYC rules. Any transaction over 1,000 Canadian dollars on any Canadian exchange has to be reported back to the exchange. It's really annoying.
It's crazy because also that $1,000 has half the purchasing power it did, back 20, 50 years ago. So $1,000, when they made these rules, there's $10,000 rule in America if you're traveling with over $10,000. That buys you way less than what it did when they made that rule 50 years ago.
All right. Final words from the both of you. We've talked about the altcoins you like. Your outlook for the crypto space. Another altcoin besides Ethereum that you like. Go.
I'm a sucker for the L1s. So I would have a nice basket of L1s. I don't think it's very hard to predict specific protocols that would make it. I would pick a nice basket, 4 to 6. And I think the blue chips are separating themselves from the pack right now.
Here's the thing. There's a lot of good coins nowadays in the top 25 and the top 50. The biggest gains in the next bull market will come from coins we probably have not heard of. But I guess things are involved today, and I do invest in these. I'm a holder. Mina protocol, small light blockchain uses ZK rollups, and generally I'm interested in the gaming space because gaming is growing by leaps and bounds, and when you get a fun game, that is something that will kind of go. It doesn't depend on Bitcoin's price. It depends on is the game fun, are users playing it? So that's the space I'm looking at.
All right, well, thank you, gentlemen. Aaron and Austin Arnold from the Altcoin Daily channel. Gentlemen, thank you so much for spending time with us.
Appreciate it, David.
Quality
Appreciate
channel,
your time.
man.
Quality channel as well. Check out Altcoin Daily, link in the description down below. And thank you for watching Kitco News. I'm David Lin.
Kitco News special coverage of the Future Blockchain Summit is brought to you by Coin Payments. Crypto payments made easy.